Well, thanks for staying with us. You're watching Tracking Trends with me, Nikunj Dalmia. Now, today we would be discussing that is the market now slightly reacting and in some cases overreacting to bad news. Are the market moving in that kind of a range where anything which is bad news is getting amplified and good news is getting ignored? We'll discuss that and what it means for the market in three specific stocks. Polycab reaction to the news of IT raids, HDFC Bank reaction to numbers, and what a collapse it's been for ICICI Prudential post numbers. But before we do that, here's a look at the market headlines and what we're tracking for you in terms of themes and ideas. And this Thursday afternoon, what are we warming up to in terms of the market setup? The market setup this Thursday afternoon is sell-off extended for the third day on the trot. Nifty is below 21,500, and the Sensex also has gone down by nearly 400 points. So it's like not a sea of red, but a lot of red, at least in benchmark indices. ICICI Bank has not recovered, HDFC Bank has not recovered. That's the point which we'll take forward. But the big question what we would be debating is, are markets amplifying bad news? Look at the reaction to Polycab, look at the reaction to HDFC Bank, look at the reaction what we have in terms of how ICICI Pru has moved. HDFC Q3, where is a sell-off of more than 10%? Where is value in this market? And then Mindtree and ICICI Pru remain under pressure. Fundamentally, what are the valuations, and technically how are the charts looking? Now, let me establish that for you. The point I'm trying to make here. Let's look at these stocks and what's been the reaction to HDFC Bank, Polycab, and ICICI Prudential post numbers. Has the bottom been knocked off in some of these stocks? Let's look at it. What is the challenge for HDFC Bank? Liability franchise, which is the low-cost deposit which you get, is reducing. If HDFC Bank is not getting a lot of low-cost deposit, it clearly will have an impact on the way how the liability franchise would move, how the lending would also move. Will the bank slow down? That is something which is ailing the stock. But the market reaction, last 2-day change, which is yesterday and today, everybody knows the change, so I'm not saying anything new here. HDFC Bank has collapsed by more than 15%. And we are talking about India's biggest bank, fourth largest bank in the world. When a bank of this size, which is owned by institutional investors, not like by some leverage traders and weak hands, when it slips, it just makes you wonder that why are markets reacting like this. Similarly, Polycab, now it's conjecture that what is the impact of that IT raid. Company in the defense, they've come out with a statement. Income tax has not come out with the verdict. Investigations are on. But this is an expensive stock where an accident was perhaps waiting to happen, and the accident has happened. Polycab had given 100% returns in 2001 and 2023, and a smidge of a bad news, the stock collapsed, went sub 4,000. From the December high, it was at 5,700. It has been 10x since IPO, but the stock in a sense has also come down cracking, and it has come down cracking both in terms of P multiples and also in terms of where it stacks. And the third is ICICI Prudential, today's casualty. A reaction of more than 10%, almost 10% for ICICI Prudential. Big miss on VNB margins. The shift in product mix is something which they are not very excited about. So is Polycab, after Polycab and HDFC Bank, could it be ICICI Prudential, or ICICI Pru Life? P multiples were extended, but a little bit of bad news, the market reaction. We'll look at the intraday graph and then we'll talk about it just to capture the market reaction. So what we'll do is that we'll look at these three stocks, we'll analyze them technically, and we'll talk about it, what it means for the market per se. So let's look at the three stocks now. First stock, let's look at it. Coming up on your screen, and Kunal is also ready. So Kunal, let's first discuss Polycab. The 1 month change in Polycab. December high 5,700, now it has come collapsing down.
Correct.
5,700 became 3,900. How are the charts of Polycab looking now to you? Let's wait for the graphic also to come up.
Correct.
We'll just wait for the graphic to load up. We are looking at Polycab, and Polycab recent high to the recent low. What kind of return we've seen? The intraday graph actually would be slightly more helpful, or the 1 week change I think for Polycab would be much more helpful.
So almost a 1,900 point drop. So from 5,700 to 3,900, 1,800 to 900 point drop. We saw in the last 4 days a 300 to 500 point recovery. But then when we look at technically, the stock has still not given any major sense of reversal. So for a best way, or the most simplest way to gauge reversal is 50% of the fall has to be retraced. So which means at least a 900 to 800 point has to be retraced for the stock to come into a slight stable territory. And that's still not happened for Polycab.
So this month the stock is down 17%. Correct. Where is the bottom, and where do you think in this bounce it could go?
So 5,500, 5,600 was the top, 3,900 was the bottom, which means almost a 1,700 point drop. we are looking at least a 950 points from the low, which means 4650 could be the first level, which could trigger that yes, the stock has now come back into a stable territory.
Second, HDFC Bank, 9% down this week already, 15% approximately down on an intraday basis if I include yesterday's and today's intraday fall. The stock is stable now. Looks like buyer and sellers are meeting at a price, but I think the damage in terms of the price and in terms of this entire comeback trade, which all of us were waiting for, has failed.
Yes, it's failed. And I go back and give a very simple relative example. What happened to Infosys? If you remember in 2022 end and 23 start, there was a similar cut for Infosys. The stock was down some 7-8%, but then the major bottom happened, I think 1.5 to 2 months later, when the stock actually bottomed out 10-15% lower, much lower than that first level of gap down for Infosys. I would sense after the kind of data which we've seen for HDFC Bank yesterday, massive 25% jump in the open interest for the stock, and it's not happened in HDFC Bank even when the stock was rallying. So on the way down, people are ready to go short. On the way up, they are not ready to go fresh longs.
Third one is ICICI Prudential or ICICI Prudential Life, ICICI Pru Life as we call it. Numbers came out today. The intraday graph, I guess, is telling you the real story in terms of how large the collateral damage has been. I mean, that's the problem, right? Stocks are falling and they are really reacting to numbers. Kunal, there you go, 8% drop this month already. Today's intraday graph, again, a very ugly looking graphic.
Correct. So again, over here, I think if I'm not wrong, ICICI Pru has been not a great performer, price performer. So there was SBI Life, which was one of the best performers, then HDFC Life, and then ICICI Pru in terms of ranking, in terms of price performance. So it doesn't come as a surprise that the stock is actually falling down in terms of the way when the markets are going to a correction. Again, not a very strong stock from the entire insurance pack, so probably I would expect that this performance may continue.
So Kunal, why are markets reacting to numbers and bad news? I mean, it's a very amplified reaction. Is this a indication or a canary in a coal mine that in the near term trend is weak? Because when these accidents happen, it is an indicator of the hollowness of the market.
Yeah, it's a very good point, Nikunj. I also believe that it's more to do with that there was over expectations built for stocks going into results. The results and the post results, of course, most of them have delivered also on the positive side. But then traders are now taking out their positions, booking profits, tempering down the positions, and now waiting for the next big signal for the markets. So I think that's where the positioning is. So for example, I think I remember just a different stock altogether, Angel One, I think reported some good numbers in terms of the year-on-year additions, quarter-on-quarter additions. Stock was down some 14% next day. So I would believe that it's because of the overweighted rally the stock has seen in the last 3 months, a 40-50% rally. It's bound to be that after such kind of a strong news flow confirmation, the stock tempers down in momentum and then goes back into a stable territory.
Okay. Now let's look at a blank page now. We'll look at 3 stocks which we've discussed, and then we'll specifically tell you the advice in case you want to bottom fish or you are looking at markets moving here and there. So let's look at it. So the blank page please, there you go, it's got lines now, so at least the handwriting will look neater. Okay, let's look at first HDFC Bank. What should a trader do who has a 1 month time horizon? We are talking about folks who have a 1 month time horizon. What should they do?
Not to preempt a bottom right now.
Okay.
Wait for the next 1 month. I believe maybe if you look at the start, second half of February is where I believe that the major bottom could be in place.
So wait. Then we look at Polycab.
So for HDFC Bank, as I said, wait for more downside. For Polycab, wait for the upside to be taken out.
Which is?
So 4650 is the level. 4500 is where the stock is sitting right now.
If the stock shows strength for next 2 or 3 days, then buy.
Then buy.
Let the stock price discover a real level and then you buy. But Kunal feels that we are close to that buying range in terms of where it is. And then you got the third one, ICICI Prudential.
This I believe is a clear avoid.
Okay. iPru Life, right? Thank you, Kunal. I think that's a neat summary. HDFC Bank, don't do anything. Polycab, Kunal feels that the bottom has been made technically, and this is an avoid because this is the first day of sell-off. Thank you very much. As always, a pleasure. Now let's hear out also from Sandeep Tandon what he had to say and indicate in terms of where the markets are headed and what his view on the in general, why he was actually underweight on financials.
Let's look at all 3 analytics which we look at. Valuations. A lot of people start looking at, yes, it is, I will say is rich, not expensive. Okay. The problem with the industry is that when we start looking at valuation in isolation, people start comparing what happened, let's say in 2000, what happened in 2007-8, or what happened in December 2017 or Jan 2018, few benchmark, okay, or what happened, let's say in September 2021 also, okay. Yes, valuation was rich, okay. Now, if you look at just one dimension approach, looking at valuation purely from one analytics, then yes, you can conclude that it is expensive. But you start bringing the other dimension to look at what was the risk appetite, what was the liquidity analytics globally, okay. If I look at 2007-8 crisis, global liquidity is 2 times of that number, okay, where markets have to factor that. Risk appetite is increasing. If you really look at today, India risk appetite is still moved up. Even last month, it has rallied further. So when you look at the combination, I don't think there is a euphoria. Okay, so we remain very constructive for Indian equities. I think we have been talking about for last many years that India is in a very unique situation. Both Indian macro, if I look at from an absolute basis and relative basis, we are in a very unique situation. So India remain buy on dip strategy. But if you ask me whether the way small cap has rallied or mid has rallied, so can we say that easy phase of bull run is over? Answer is yes. Okay, but very important to understand, we are still in bull run. We are in difficult phase of bull run, but we are in bull run. Like if you ask me how 2012 onwards, when rally started post Lehman crisis from August 2012, the easy phase peaked out by August 2015. But till 2018 it lasted. So
let's address some queries now, and you've got the first query: 700 shares of Union Bank at 123, 1100 shares of IDFC at 88. Technically, how is Union Bank and IDFC looking?
So I think both of them are attractive. In fact, Union Bank has been one of the few stocks which has done exceptionally well in the second half of 2022. Then 23, the stock went a bit more sideways. I think now these PSU banking stocks have come back into a breakout mode. This is the recent charts for the stocks of Union Bank. I think you should be staying put for Union Bank. Even IDFC Limited and IDFC First Bank, I think because both of these stocks, they move in tandem. Both of them have ended their major consolidation. So this is the last 7-8 months, these stocks have been very, very sideways. I think they are now ready for a breakout. So I would recommend a hold.
Second one is from Mr. NG Prasad from Andhra Pradesh. Thank you, Mr. Prasad, for this query. 500 shares of Marico. And is it a good idea to shift to Tata Consumer as he already has ownership there?
So I think it could be a good strategy to shift. The only reason for that, Nikunj, is because Marico has been again a sideways stock. So, just like we discussed HDFC Bank, Reliance, at a certain point that these stocks were sideways. Same is the case with Marico. Absolutely sideways. Tata Consumers on the other hand has given fabulous return. From I think 800, 850, it's almost 1100 plus right now. So it's always better to go with a performing stock in a sector which is generally low to moderate beta.
Okay, last question. Let's take it. Last but one question. A lot of queries today. We've got Anil Kumar Bhalla from Jalandhar. 20,000 shares of PNB, 10,000 shares of NMDC, and 20,000 shares of NHPC.
Wow. So I recommend to hold all of these three names. Okay. I'm very bullish on the prospects of PNB. For example, I believe a target of 125 to 130 is very much possible for PNB, even if you have a 6 to 9 months kind of a time horizon. Same would be for NHPC and NMDC. In fact, for NMDC, I believe 280 by the end of this year is a very much high possibility as a target.
And the last one is SBI or Paytm. Always a difficult one. Right?
It's a very difficult one, but given the context of the markets where we are right now, the bank nifty, the pressure which HDFC Bank has created, I strongly believe SBI could stand out to be a rank outperformer from here on. So I think at 630, I would give more weightage to SBI.
I track Gautam is written this query to us from Bombay. So Gautam, I can share my thoughts on Paytm. Look, SBI is one of those value stocks. At a time when HDFC Bank is slowing down, will this also slow down? The answer to that is, SBI may well be no. Why? Because, they're getting a lot of liability. Plus, SBI has got presence in insurance, AMC, credit card business where the market leader, the stock has done nothing. So if India will grow, SBI will grow because of the access to low-cost deposit, with even HDFC Bank has struggled with. Similarly with Paytm, there is a supply-demand equation which I think Paytm will always exist. My biggest challenge with Paytm is that I'm not so sure after new RBI guidelines how soon they will be able to reach their path to profitability. That is something which I think will remain a concern in my mind, at least in the short term. But I've been, in a sense, very cautious on Paytm, but the stock has done reasonably well. Over the last 1 year, I've been very cautious on Paytm. But
I think the stock is also corrected, and it's been one of those stocks which has been suddenly, going to a correction, and there's a lot of negative news flow, negative impact which has happened to the stock. So, you know, just like Zomato, for example, just to give a classic example, when that negative trend started off, the stock fell down to 40, 45, 50 rupees. But then once things stabilized, you hardly saw any 10% or a 15% downtick for a stock like Zomato. But for Paytm, we've seen even after settling, the stock has actually gone to that 10-15% correction twice or thrice. So that's what you don't want for a stock when you are looking to go into an investment from a long-term play.
Well, thank you very much. Thank you very much for your queries, and that's it on this show. Last 1 hour of trade coming up right after this break.